If you have ever walked into a local neighborhood bank branch, applied for a standard car loan, or carried a personal credit card in your wallet, you are moving through a financial architecture designed by one specific man. Today, the concept of consumer banking feels entirely natural, but for most of history, banks flatly refuse to serve ordinary working people. The system that currently holds your mortgage and manages your paycheck was not built by a Wall Street elite, but by Amedeo Peter Giannini. Giannini was a high school dropout and a wholesale fruit peddler who became the most disruptive financial architect of the 20th century. He looked at a financial system built exclusively for the rich and decided to dismantle its exclusionary practices from the ground up. The investigation into his life reveals exactly how a grocer's son forced an arrogant banking establishment to accept the everyday consumer. To understand the magnitude of his revolution, you have to look at the world before he changed it. At the dawn of the 20th century, commercial banks were intimidating fortresses of marble and steel, specifically designed to keep the general public out. They existed solely to serve large corporations, wealthy merchants, and established industrial titans. If a baker, a carpenter, or an immigrant laborer needed capital to buy a home or start a business, the institutional doors were firmly locked. The working class had exactly two options for managing their money. They could hide their meager savings under floorboards, or they could borrow from neighborhood loan sharks at ruinous interest rates. Giannini understood this harsh reality perfectly because he was born directly into it. The son of Italian immigrants in California, he left school early to work in his stepfather's wholesale produce business. Navigating the bustling docks of San Francisco, he spent his formative years dealing face-to-face with farmers, merchants, and laborers. He learned quickly that these working people possessed immense integrity and a deep commitment to paying their debts, even without formal collateral. By the age of 31, Giannini had become a highly successful produce broker and essentially retired from the food trade. However, a seat on the board of a local savings and loan society suddenly pulled him into the elitist world of finance. Sitting in those boardroom meetings, Giannini was entirely disgusted by what he witnessed. The bank directors routinely denied small loans to hardworking immigrants, preferring to lend the institution's capital only to their wealthy friends and business associates. When the board flatly refused his proposal to start offering loans to the working class, Giannini stormed out and resigned. He decided that if the establishment would not serve the people, he would simply build a new bank that would. In October of 1904, Giannini opened the Bank of Italy in a converted saloon in the North Beach neighborhood of San Francisco. The physical space was entirely different from traditional banks, featuring open desks and a welcoming atmosphere instead of barred teller cages. The core mechanism of his new institution was character-based lending to the entirely unbanked population. A simple ledger book resting on his desk recorded small, unsecured loans handed out to fishermen and bakers, backed by nothing more than a personal promise. Giannini famously judged a borrower's creditworthiness by looking at the physical calluses on their hands rather than the paper assets in their portfolio. This radical experiment in class mobility was humming along smoothly until the earth violently shook in April of 1906. The Great San Francisco earthquake and the subsequent massive fires leveled the city, turning the financial district into a smoldering ruin. Traditional bankers panicked, locking their surviving vaults and refusing to open them until the fires were completely extinguished. Giannini took a completely different and highly dangerous approach to the disaster. He loaded roughly $80,000 in gold and silver from his vault into a pair of borrowed garbage wagons. To hide the fortune from desperate looters, he covered the cash with a thick layer of fresh vegetables and oranges, then sneaked it out of the burning city. While the major institutional banks remained paralyzed and closed for weeks, Giannini immediately set up a makeshift desk on the waterfront docks. Using a simple wooden plank resting on two barrels, he began lending money to devastated residents who needed immediate cash to rebuild their lives. His handwritten ledger from those chaotic days recorded loans given to anyone willing to promise they would reconstruct their ruined homes and businesses. Every single one of those desperate, unsecured loans was eventually repaid in full to the Bank of Italy. This dramatic display of mutual trust during a profound crisis forever secured the absolute loyalty of the working public. Giannini had proven that lending to ordinary people was not just a charitable act, but a remarkably sound business strategy that could challenge the titans of Wall Street. The success on the San Francisco docks convinced Amedeo Peter Giannini that his inclusive model could scale far beyond a single neighborhood. He envisioned a system where banking services were not centralized in one intimidating downtown headquarters, but distributed directly into the communities where people actually lived. To achieve this unprecedented accessibility, he pioneered the aggressive expansion of branch banking across the state of California. The core operational engine of his expanding empire relied on routing capital from cash-rich agricultural towns to rapidly growing industrial centers. A centralized master ledger at the headquarters tracked daily deposit slips sent from dozens of small rural branches. If farmers in the valley deposited their harvest profits on a Tuesday, those exact funds were mobilized by Thursday to finance home construction loans in the city. This rapid rural expansion deeply terrified the entrenched financial establishment of the era. Independent town bankers and powerful Wall Street financiers viewed branch banking as a monopolistic threat to their localized control. They relentlessly lobbied state legislators to pass strict laws designed specifically to block the Bank of Italy from opening new locations. Giannini refused to be contained by regulatory maneuvers engineered by his wealthy rivals. He bypassed the hostile state banking commissioners by secretly acquiring stock in small, independent banks through a newly formed holding company. Once he secured a controlling interest, he would seamlessly convert the acquired community bank into a brand new branch of his growing network. Before venturing into urban megaprojects, Giannini revolutionized agricultural finance by treating farming as a predictable industrial process rather than a risky gamble. His loan officers carried detailed crop assessment forms directly into the vineyards and orchards to evaluate the harvest potential firsthand. This direct evaluation allowed the bank to offer vital seasonal credit to immigrant farmers who spoke no English, fundamentally transforming the agricultural economy of the region. As his capital pool expanded, Giannini began financing entire industries that traditional East Coast bankers considered far too risky or entirely disreputable. In 1919, he extended a massive line of credit to struggling independent film producers, essentially bankrolling the birth of the Hollywood studio system. The bank's loan contracts secured the actual celluloid film reels as collateral, ensuring that early blockbuster movies and groundbreaking animations actually made it to the silver screen. His commitment to civic growth reached its absolute peak during the darkest depths of the Great Depression. When local municipal bonds to build the Golden Gate Bridge failed to sell because traditional investors panicked, Giannini stepped in to purchase the entire issue. He signed a physical authorization draft for $6 million, declaring that the bridge would help the working people of California find desperately needed employment. By 1930, his institution had grown so massive and culturally ingrained that the original regional name no longer fit its immense scope. Giannini officially consolidated his vast network of branches and renamed the entire enterprise the Bank of America. He wanted the new title to reflect his ultimate ambition of providing accessible, everyday financial services to every single working citizen in the nation. However, his unprecedented success had finally provoked the full fury of the federal government and Wall Street's most ruthless power brokers. As the economic depression deepened, hostile corporate raiders and conservative regulators conspired to strip Giannini of his own empire. The grocer's son was about to face a brutal proxy war that would determine whether consumer banking would survive or be crushed entirely by the elite. The coordinated assault to strip Amedeo Peter Giannini of his own institution struck while he was recovering from illness in Europe. A syndicate of Wall Street financiers, led by corporate raider Elisha Walker, quietly seized control of the bank's holding company boardroom. They immediately began dismantling Giannini's consumer-focused branches, planning to sell off the assets to traditional, elite commercial banks. When news of the hostile takeover reached Giannini, he rushed back to California to launch the most dramatic proxy fight in financial history. He realized that while the elites controlled the boardroom, the actual ownership of the bank was distributed among thousands of everyday working people. He embarked on an exhausting statewide tour, holding massive public rallies in town squares and community halls to appeal directly to his loyal depositors. The primary mechanical weapon he used to reclaim his empire was the shareholder proxy authorization card. This simple, printed ballot, mailed directly to the home of every single small investor, legally transferred their voting rights directly to Giannini. By manually collecting these signed proxy cards from farmers and bakers, he aggregated the fragmented power of the working class into an unstoppable corporate force. At the decisive 1932 shareholder meeting, the Wall Street syndicate assumed their institutional wealth would guarantee victory. Instead, Giannini walked in armed with massive sacks filled with thousands of signed proxy cards from everyday Californians. He crushed the hostile takeover with an overwhelming majority vote, instantly purging the boardroom of the East Coast elite and retaking total control of the Bank of America. Having secured his empire, Giannini spent the rest of his life cementing the infrastructure of modern consumer finance. He championed the creation of the 30-year fixed-rate mortgage, permanently transforming home ownership from a wealthy privilege into a middle-class expectation. Following his death in 1949, his successors launched the Bank Americard, the very first general-purpose credit card that eventually evolved into the modern Visa network. The ultimate consequence of his life's work is the hyper-financialized world we all navigate today. The elite bankers who once locked the working class out were entirely defeated, forced to adopt Giannini's model just to survive. Today, every major financial institution relies heavily on the consumer banking fees, credit card interest, and retail deposits that Giannini first proved were profitable. However, this universal access to capital comes with a profound modern trade-off. The same system that allowed ordinary people to buy homes and start businesses also laid the groundwork for a society heavily burdened by inescapable consumer debt. Do you believe the democratization of banking ultimately liberated the middle class? Or did it simply turn the working public into a permanent revenue stream for Wall Street? If you want to continue uncovering the hidden history behind the everyday systems that control our modern world, subscribe to our channel.